Hey guys. Hello?
Hey Doug, we're back.
Are we?
We're here. We're good.
Wasn't sure if you were joining us this morning.
You gave me no warning, so it's all good.
Straight into
So
Straight into it.
Rob, our producer, has said we do a lot of ums. Did you guys see that message? Yeah, like
haven't noticed.
yeah. And apparently it's very annoying, not only to him, but a lot of other people I've heard this from.
We'll be much more concise this time.
Remember, I have an idea. I think we should tally up all of the ums and uhs and whatever else takes place at the end of the episode. Not we'll have to do it programmatically. I'm sure there's AI or something for this. What else is it for? And whoever does the most has to pay $1 or £1, Peter, in your instance, each.
It's a big difference.
Deal.
That's
a bad deal.
Terrible deal.
And
how about Canadian dollars?
We'll give it to a charity of Rob's choice.
Wow.
I like that.
Yeah.
I'm going to be very careful with my speech throughout this podcast.
Because remember, I asked him, I was like, how can we combat this? And I think he's like, stop being a dumb idiot. I was like, all right, fair enough.
Wow. But so Dylan will let Doug do all of the interview today and we'll just sit here nice and quietly, right?
That's how I started this whole thing, because he didn't tell me we started recording, so no big deal. I was looking out into space, probably is what it's going to look like, but I was looking at a different tab.
There's a little, it says recording up in the corner.
It was on a different tab.
Doug, on a separate topic, tell us all about your trip. You had a birthday and a celebration, right? So
I did.
You were spending that.
I did have a birthday.
62 years old?
I was going to say, I don't think I look a day over 34. Right?
I mean,
wow.
Peter doesn't look a day over 34, but
it's because Peter's 27.
Yeah, well, I get it.
Listen, you don't end up looking like this without really caring about your skincare regimen.
Yes.
Just an FYI. No, it was a fun trip. Went out with our good pal of the show, Alex Bond. He has a burgeoning podcast show. God damn it! I just did sorry. I'm going to lose. I'm going to lose.
I'm not going to speak.
You're going to benefit charity. It's fine.
There we go.
I hope it's a good one.
Yep.
Alex has a podcast. Did you guys know this? Alex has a podcast show.
Yes, of course.
Never didn't know that.
And I guess it's doing okay. It sounds like he has a few listeners now. Not as many as us, but I think he's been doing it for a little bit. And so we should have him on at some point. Maybe we can all compare podcast stories. Actually, he's on our archived one, isn't he? The one that
the one that can't. Yeah, no one will see it ever.
Yeah. Well, you can see it if you pay us $10,000.
There is an amount. Amount.
I figured. Hey, so we have a podcast guest on today that might be equal to all of our other greatest guests. At least this guy has built a great product. He's going to tell us about it. He comes
so much fun.
He comes
watching you squirm.
Yeah, very uncomfortable. He comes from Rob.
You say from or
From. That was from.
Okay.
He comes from I don't know much about him, his background or anything. So we're all going cold into this. Rob made the intro, our great producer Rob. And I think Rob has interviewed him before. And this guy, he's coming in cold. He needed no prep. He's like, I'm ready to go. I can do this. So this is a professional podcast. This guy's going to teach us a few things. I think not only about building an MGA, but how to actually act properly on a podcast. We're going to really grow up.
Is there a chance that he has a stutter and says regularly?
Oh, does this count? Does the guest count? Are they going to have to?
I say we include everyone in this. Yes,
it's true. That's good. Now,
also,
this guy's a pro though. I have seen some of his work, and we're not going to get away with it on this one. We need to find a ringer, Dylan. We need to find somebody that just is going to really, really screw it up. That this guy isn't it.
there's no one that will beat us, to be quite frank. So it's always going to be me or you having to pay this.
Yeah.
Though
true.
Peter does say a little. Peter has a thing. He has a little quirk where he'll say something and they go and it's not exactly an It's a something. It's something else. It's very very British. I don't know what it is.
Sounds like a really unnecessary one.
Yeah,
there it is. We just get it.
We'll have to come up with some rules.
All right, sounds good. All right, maybe next episode.
How do you mute the mic?
Yeah. All right, so why don't we bring Bobby on, because I want to hear about this guy's story, and all of you out there right now that are building MGAs. I think you're going to learn a lot from this one.
Let's do it.
All right. Hey, Bobby.
Right.
Welcome. Before we get started, I just want to let you know something. We're doing a contest right now because Rob, who introduced you to us and said that you should come on, and we're really excited to hear about your story. But Rob has been complaining about the number of ums and uhs that we have.
And so filler words.
Yeah. To combat that, we've now started a contest where whoever at the end of the show, we're going to tally it up. Somebody's going to tally it up. We don't know who yet. And whoever has the most has to take the number that they had and multiply it by $1 each and give that to charity. So you are now in this contest.
Got it. He's an unwilling participant. Don't worry, Doug and I will definitely win or lose, however you want to put it. So it's totally fine. You're clearly a pro at these podcasts. I just hit one right there, and we're gonna lose. There's 2 for you.
And Peter's not going to say anything the entire episode.
I'm just going to be very quiet, Bobby. That's the logic here, I think. Yeah.
Sounds good.
All right. So this is your opportunity to back out, because you're like, what the hell did I just get into? Of the show outright, if you want to.
Either that, or you can discuss what Rainbow does. And I think our
why don't we pivot?
Why don't we start with that?
Rainbow.
Yeah.
So we're an MGA program administrator that develops specialized programs. I just did it. And wow,
it's amazing. It's when you're conscious of it, it's really
don't let them get in your head.
Yeah, don't worry, you're not gonna have to pay for anything, Bobby. Don't worry about it
right now.
Yeah, you're good.
Program administrator. We develop specialized programs, P&C commercial programs. We distribute all of our products through agents. We try to differentiate on a few different attributes of the business. Number one, we transact our business through our online platform, and we build and maintain that online platform ourselves. We don't use any third-party software. We also have a human underwriting team that handles referrals from the agents. That allows us to give a closer look to accounts that require that. It also allows us to work on larger accounts. And we are having a lot of fun. We're about 2.5 years into writing business. We started the company about a year before that, and it's off to a great start.
Nice. So I have a question right out of the gate about the technology aspect, because I think this is something that comes up a lot when people are thinking about the build versus buy. And I read this stat. Do you know the InsurTech New York guys, like David and Tony? They did a survey of all of I don't know how many MGAs, but a fair number. And one of the data points in the survey was over half of MGAs had built their own, at least policy admin system, and I think a couple of other systems as well. So curious how you guys kind of like came to that decision. I assume when you said like built this that includes the policy admin system, and I'm sure a number of other things. But how did you guys make that determination early on?
I think that it's a DNA thing. In the case of Rainbow, myself and my 2 co-founders actually came more from the world of technology. And then I've spent now almost 10 years in specialty insurance. And so I had that appreciation for the dependable components of underwriting and how important that is, versus just trying to win on user experience and ease of doing business and transactional efficiency. We also felt like part of our value proposition was that we wanted to be highly specialized and highly customer-centric for the actual end insured. And in order to do so in a way that felt differentiated, we wanted to have supreme control over that experience, both in terms of how agents interact with our underwriting and our insurance product, and also in terms of how our team interacts with them, if that makes sense. Like our underwriters use an admin panel that we've developed. Our sales and marketing team use data that comes from, in addition from the sort of the whole sales cycle data component and everything we're doing over there. The systems data points help inform the salespeople when they're engaging with the agents. That allows for that finer personal touch, which agents really appreciate. And it's really important as you start to scale the business. I think if you're a small regional program administrator, MGA, you operate in 1-2 states, you have 2 underwriters or a handful, and you trade with all-time 30 agents, and that's all you do. I think it's really, it's a very different exercise to give them a super personal feeling experience. We want to try to do that for agents all across the country, across many different classes of business. And so technology is kind of the equalizer. So for us, it was really a desire to kind of do something that we knew, which was develop software, and also kind of do the hard thing of building that control.
Yeah. Bobby, a couple of follow-ups there, I guess. So this agent distribution that you've built, talk us through the first steps for that, and maybe give some context of the detail of the products as well. My question always to MGA founders and companies is, it often appears from the outside crowded, right? There's lots of people offering similar types of products. So multiple questions here, but number one, how do you differentiate yourselves with your agents? Number two, how do you establish those agency relationships? And number three, which I think you touched on a lot before already, was how do you give great service to those agents as once you've got them, once they're hooked on your products and interest?
You can put all 3 of these questions in the chat as well. So
I was going to say, I think you're going to have to repeat those questions for me. But so for the first one, how do we differentiate ourselves? We try to differentiate as much as possible on the hard things, on the things that are not a static thing. Like we developed this product. It has a component that no one else has. Now we're just going to sell it. And that's our differentiator. Because that, to me, actually doesn't feel that hard. We try to win on, we want agents to love the experience that they have trading with Rainbow, and we want them to feel that it's different. So for us, one of the components of feeling different is you can get an online quote, and that's true for about half of the submissions that come into us. But then in the other half of the submissions, it's referring to an underwriter. An underwriter is going to engage you as an agent. An underwriter is going to develop rapport with that agent. And that's hard to do, especially as you start to get to scale. So giving them that human touch overlaid with a really good digital experience, that's a critical part of our experience. And that's one of those hard things. The other thing, sort of back to the first thing I was saying though, is, we play in a very crowded space, which is the BOP space today with the products that we offer. But we focus on the restaurant industry, which is not necessarily the focal point of other BOP appetites. And we have very deep and granular coverage specific to restaurants. That reflects itself in our form. Also, our product is admitted. And so that is hard itself. And it's not only hard from an approval process, it's also hard from a regulatory process. Mm-hmm. And like you're committing to this thing basically once it gets filed and approved. So those are some of the things that we do that tries to be different. We definitely don't try to compete on always being the cheapest quote. That's not our approach to the market. I can understand why it could be for some other people. And also, we are always looking for new ways to engage with our agents, both in the field and digitally. We're constantly pushing both of those things. Okay, so what was the second thing?
Wait. Before Peter gets to the second one, really quickly, on the product differentiation side, so obviously admitted it's a big choice, right? Admitted versus E&S. So an E&S gives so much flexibility into what you're writing. Have you found that there's any issues with that from the admitted side? And also, are you writing things like liquor liability that some people want to shy away from? Are you excluding that? How to sublimiting it? How does that work?
Yeah, so to take those in reverse, we absolutely write liquor liability. We actually write higher. We have an appetite for higher alcohol establishments, even than Travelers in Hartford, which are really some of our key competitors. Okay. The reason that we are comfortable writing that type of risk is because we have all kinds of tools that we've developed to evaluate and monitor the performance of those businesses to try to have some signal if it feels like that risk is generally moving in a bad direction. And I can talk more about some of the ways that we do that. There's this thing called continuous underwriting. As far as like the decision to be admitted, I think that some companies choose to be non-admitted because it is easier, certainly, to bring a product to market, but it's not always what the market expects. Like, just because it's easier doesn't mean that it's better. And if you're a restaurant in America, for like 80% of the restaurants, and we're talking restaurants, not really bars and taverns, restaurants want admitted coverage. They don't want to have to pay the additional fees for it being surplus. And that's what agents expect too. So I think it's also a function of the distribution. So, the primary companies that we compete with, the primary companies that we lose business to or take business away from are almost always admitted. So again, I think it just really depends on who's the end customer and what's their expectation, more so than is something more flexible. That's how we think about it.
Yeah. On the agency piece, Bobby, so again, from the outside, I look at it and I see the US as thousands of agents all over the place, from the very, very small to the quite substantial. You're starting off as a new brand in this space. What are your strategies for the right agents to know about you?
We really try to do our homework, and we've invested very heavily in sales and marketing. That includes the tools that we use, sort of the system of record, which for us is HubSpot, all the different tools that we use to, because you're absolutely right, like there's thousands of agents. The good news is basically all of those agents are discoverable. They're licensed producers. You can create a master list of all agents. And then you can start to dig down deeper and deeper and deeper. Okay, in different territories, what are the agents that seem to be winning more of the business? In a state like Texas, just a random state, how do you focus on the key cities and the suburbs and just sort of drill down and create a pretty granular map of the footprint, basically? Then you think to yourself, okay, how can I augment the data that I have beyond just the producer and their NPN using third-party tools, data enrichment tools? And then how do I start to cultivate an outbound motion to sort of indicate like which of those agents are going to be a good fit for us or not? We reach out to tons of agents because we want to be able to have conversations, and then we end up appointing a much smaller number than we actually end up reaching out to. We also, that's sort of like general philosophy and general motion. Now, we also rely heavily on word of mouth, less probably from agents saying, oh, you should go work with my cousin who's an agent in that other town, and more just we will hear from other companies that write this class of business who their key agents are. We will hear from people that have worked at other companies on the agency side. Hey, these are the people that we always tended to lose our business to. And then there's sort of the spectrum of, is this independent mom and pop type agencies, or are you talking about the Gallagher's, Marsh's, Hubs of the world? And we're fortunate to work with a pretty broad spectrum. And so each of those different agencies is going to have its own expectations and its own kind of opportunities for growth. So the short answer to your question is that we're finding agents in all different ways. We're doing it constantly on an ongoing basis. We have a team of about 15 that are just laser focused on engaging and nurturing agent relationships. And that's how we get them to work with Rainbow.
It's funny, you talked about, sorry, I close my window here to the long guy outside. Rob will be very angry by all of the noise. Rob is a lovely man, by the way. We're poking a lot of fun of him. I found agents, even if they're competitive with each other, love to talk to each other, to share notes and say, hey, I used Rainbow, or I used like this technology product in our case, whatever it is. And no other, just trying to create goodwill or just being like, I think a good competitor. I've never seen another space like that where so much information is shared amongst people that at the end of the day are probably competing with each other to some extent.
Yeah. And it's kind of interesting too that I really love is when we're interviewing prospective hires. And if you look at our team, we have about 40-ish full-time employees, and then we work with a dozen or so contractors that do different things. 15 of those people are on the product and engineering side, technology product and engineering. And then the remainder, 25 or so people, are all insurance practitioners. And everyone has a background in insurance. So that's customer service, claims, actuarial, underwriting, or sales. Everyone's from insurance. And when we were interviewing each of those people, we would frequently hear, oh, as part of doing my homework, I reached out to several agents that I know work with you guys, and they told me this or that. And generally everyone has good things to say, which is really nice. Yeah. I sometimes wonder, like, how did you know what agents we work with in the different territories? It's not on our website, and so it's like these things are discoverable, I guess.
Yeah, I think so. I'm curious, Peter. I think you have one more question, but maybe just on the topic of like the distribution and building that. Did you bring somebody in that had built distribution with like a Markel or somebody before, and they kind of had a game plan, or did you guys start from ground zero with that as well and kind of build that up?
We started from ground zero. So prior to this company, I actually started a digital surplus lines brokerage. So spent time in the surplus lines space. That company, it's called PathPoint, distributes all of its products through retail agents, independent agents, larger agents. And one of the two main things that I did at that company from a business development perspective was building that initial crop of agents that we worked with. And in fact, a lot of the states where we were concentrated was similar. The larger, you can think of the states that tend to go E&S more frequently. So it's larger states like Texas, California. And so I had a good sense of who some of the right early profiles of agents would be. Plus, having just been an insurtech operator now for going on 9 years, you just hear a lot as you have other friends who are also founders in this space. Oh, these are the key agencies. These guys are great. Those other folks are a little bit tricky to work with. And it just sort of starts to build on itself. And then as we've added people that have their own experience and expertise from other companies where they've worked, that's just amplified whatever we were doing already.
That's brilliant. Peter, one more question, right?
Yeah, Bobby answered it really well. So my question was going to be towards to follow up the agency distribution towards distribution of staff, and you touched on it, and I find that a really interesting deployment because we had a conversation on our last podcast with Penn, who grew their UK MGA. They grew to $1.4 billion premium, something like that, and they were talking in similar vein to you about deploying staff to maximize kind of revenue opportunities, right? Like they're either on the underwriting side or they're the sales team or growth orientated. So very interesting. I mean, to hear you're already 40 people plus the contractors, that's quite some growth in 2 years. How's that been? 2.5 years, sorry.
No, it's been great. So when the company started in January of 2022, it was myself, my two co-founders, and then the very first person we hired is the person who's now our head of insurance. One thing that I knew going into starting this business, especially as an underwriting business, was that the most important hire early on was going to be the person that was from insurance, that could help us navigate everything that goes with that, with bringing a product to market. We found a great person, and they had been instrumental in building other MGAs, so they were a great fit. And they were also like, as you're building a company like this, there are these different stages you go through in the early stages. And then once you get past like 100 or so employees, I don't think this matters as much. But in the early days, depending on what department the person will ultimately be in, there's this reluctance to sort of like take the leap. It's already a leap to join a startup. It's a pretty special person that wants to do that. It's a pretty special person, I feel like, who wants to leave a stable insurance career and jump into a startup. That's like an even different person. And then on top of that, it's an even different person who wants to be the very first insurance hire at a company like that. And then once you have that first person, then the next person is it's more comfortable, and so on and so on and so on and so on. And so that comfort, like X factor, and it's challenging because you can have great rapport with someone, you can give them what they're asking for as far as compensation, but at the end of the day, the thing that's going to keep them up at night is, I don't want to be that like first person. I've not ever been in that position. And it's sort of the fear of the unknown. So yeah, hiring the right people has been probably the most important thing we've done, making sure that we keep attracting really talented people who combine, sound fundamentals for underwriting and customer service and sales, and are comfortable sort of doing it in an environment where there is a playbook that's constantly evolving. Everyone's sort of open and encouraged to give feedback to one another and to collaborate with one another. The nice thing, though, is that since this is not necessarily a typical underwriting environment or insurance environment, like I'm saying, it's kind of like self-selecting in a way. If you're going to be comfortable, this is a good place for you. If you're not going to be comfortable, it's probably not going to be the best place for you. And we try to determine that early on. And so far, it's been working really well. We've grown we've grown our headcount most quickly kind of in the last 12 months. And that is growth across several different teams, which is really exciting. And we plan to primarily grow the non-engineering side of the business over the next 18 to 24 months.
How did you, talking about the first insurance hire, which is really interesting, how did you make that person or convince that person to take the leap with you?
I think there was a timing element from on that person's side that was convenient. Sort of got very lucky with that. We did. That person was also unique in that the environment that they had come from, where they had worked for a decade, was very entrepreneurial. It was led by a very entrepreneurial founder. That person themselves had sort of started several companies in insurance, and it was just great timing and a really good fit. We had a couple other candidates, and I've told this to this person, so I'm happy to share it here too. We had a couple other candidates in the running as well, and when we were making the decision, we weren't really sure of who was going to be the best person. This person was our top choice, and in hindsight, those other people would just absolutely have never been as good as this person has been. This person demonstrates that every day with like the resilience and juggling all these different things. And so it's been great. And then, but the thing is that person, in addition to sort of having startup DNA, which is very intangible, I feel like, and in some ways it's like not even a real thing. It's like something someone says, but he's also very, very passionate about insurance, studied insurance in college. He's like, he speaks in a very technical way when he talks about insurance, has a lot of experience. The guy's incredibly level-headed. So when agents do things that are sort of erratic, it doesn't rattle him at all. If there's a claim, he's just sort of ice water in the veins, just deals with it. And it's made me realize there were all these other things that we needed in a really great first hire, that when I was evaluating for people at the beginning, I wasn't even like really looking for those things. And now in hindsight, and that doesn't always happen with hires. So we feel very fortunate to have them on the team.
Yeah, very cool.
Very nice. So just curious, how long was that process of the courting and decision making with those first hire, really for the first insurance hire, but there's 2 or 3 people in the running, or however many there were. What did that process? What was the time frame for it? So
we were using recruiters because that felt like the most effective way. It wasn't just that it was effective. I just from my previous experience found that when a recruiter contacts some of these folks, it lends an element of credibility versus just like some fly-by-night startup reaching out that they've never heard of because at that time, it's like you don't have anything. You don't have as a startup, you don't have a brand, you don't have a real name. Chances are your name's going to be silly, Rainbow. and you're reaching out to people, and they're just, block. I don't want to talk to that person again. So when it's the recruiter, also the recruiters are pretty good at, they know before the person jumps, right? So you can you have that like early look at them. Once they're in the market, it becomes like truly in the market, it becomes a little bit more competitive because these insurance roles just tend to pay really well. And especially for good people on the underwriting side, as a startup, it's really hard to compete with the cash comp. So the process, I would say, probably took about 3.5 months. And then once we found the right person, it was just sort of, we locked in, and that's sort of what we were focused on, sort of getting them on board. And then the very next hire was our first underwriting hire. And that person was actually was looking at my LinkedIn, like it said, like people who viewed your profile. And I was like, oh, who's this person? And I looked at his background, and I was like, this is a really interesting background, actually. I'm going to message this person. And he responded back to me. And again, coincidentally, he had been thinking about he had been in a startup, then he went to a more traditional company, and he's like, I'm kind of missing the startup environment. And it ended up becoming great. And now he's effectively our head of underwriting. And he's grown fantastically with the company. And then the two of them, now you have this great foundation, and they can give other underwriters comfort. Hey, this is a great environment. People, they really care about underwriting here. We're very focused on loss ratio, and that gives the next candidates comfort, and then it sort of snowballs from there.
Bobby, I got several questions related to this. This is, I think this is super important. Did you decide, when you decided to build an MGA, had you decided which lines of business that you wanted to be in, or did the lines of business come later when you brought in the underwriting expertise and they had niches that were interesting to you based on their experience?
That is a great question, because now as we think about scaling the business beyond just restaurant, we have 2 programs, live restaurants and beauty and wellness. And as we think about scaling beyond that, this is something that I get asked a lot, because the traditional playbook, not as a traditional playbook, but a very common playbook right now is these like team lift outs, and I'm going to bring an underwriter that has this expertise. Maybe they bring the capacity with them, and we'll just be a platform. I knew going in that I felt like there was a lot of opportunity in small commercial and lower middle market P&C. There were other companies that were tech enabled that were taking a very broad approach to their appetite. They'd have a BOP or a package with hundreds of codes and appetite. And kind of from my E&S days, I felt like the winning formula was actually to be much more specialized and to focus on a few class codes, do them really well. A restaurant appetite, it's like 10 class codes, a dozen class codes. Now, some of those class codes are like casual dining, which characterize 80% of the restaurants in the United States, or some very large number. But still, there's just it's fewer things that you have to kind of be good at. We really wanted to find a segment within small, so we looked at the big chunky segments. It was like contractors, hospitality, retail, medical. I didn't really want to do contractors. Felt like that was very transactional business and also typically smaller premium. Hospitality was the one that was just the most interesting to me. And hotels and motels at the time, the 2 big branches are sort of like food and beverage and hotel motel. Hotel motel didn't really feel, it was very property heavy. People were like, you're never going to get reinsurance for that. It's a very, very tough market. And I'm sharing all this to just sort of the provenance of the idea. So then we chose restaurants. I chose restaurants, me and my one of my co-founders, because the third co-founder joined like a few weeks later. And one of the things that I often say to the team is, I wonder if all of the people who are here now who do such an exceptional job at underwriting restaurants, if we were all around the table then, would they have been okay with choosing restaurants to start with? My bet is that they would not have been. And they would say, why would you choose restaurants? Like, that's really hard. No one likes restaurants from a reinsurance perspective, or it's very challenging. Why would you do that? And so anyway, you probably have other questions, but I'll just stop there so I don't keep.
It's kind of a good thing. I mean, there's a couple of things you've talked about, right? Your first insurance hire being in the place that he was in, and like kind of the good fortune of that. And I think also just this good fortune of maybe not knowing what is going to be more difficult and then just driving forward with it. the point of that is sometimes the success is just it's luck, right? It's being in the right place at the right time and kind of keep pushing forward. It's more than just luck, but there's a component there that's needed. And I always think it's interesting hearing about success stories and what timing or not knowing something played into that.
Well, and so we were working with, and I'd already engaged an actuarial consultant. That was a learning. Someone was like, you should engage an actuary. They can start to develop the filing for you. And we went out and engaged a very good one that was very expensive. And the meter's just sort of running in the background. And they're like, so what do you want to do? And I was like, it might be restaurants. They're like, well, let us know. And then when sort of a really exciting moment was when we started courting these different candidates for the underwriting, for the what's now head of insurance. At the time, I was head of underwriting. For that role, some people who we really liked were like, I don't know about restaurants. Like, can we take like a hard turn? And the candidate that we went with was like, sure, I think restaurants is a smart idea. Let's do it. There's a lot of them. It's inherently distressed. You got to remember too, this is like only a year after COVID had really become a thing and restaurants were really struggling. So to your point, Doug, about timing, I wasn't even really thinking about this as much. I was thinking like, oh, it's a distressed class. Let's go in and let's do something. And then the timing element where we were very fortunate was that I didn't appreciate all the established carriers, the Nationwides, the Farmers, the State Farms, they're all actively exiting writing restaurants. And so a lot of really great business. For most restaurants, you have to have insurance because you can't get a lease, you can't get a working capital loan. All this great business came into the market, and we were definitely in the right place at the right time and able to pick up on a lot of that momentum.
Nice.
Bobby, in terms of the distressed portfolio, did a lot of restaurants have, again, I don't know the detail of these policies and wordings, and Dylan's so much better at this than me, but did a lot of these restaurants have business interruption caused events during COVID? How was the market reacting to that in your years starting after that serious event for the industry? Or was it simply a case of there were a lot of restaurants struggling, closing, revenues down, etc.?
I think it was more the latter. I think my understanding is that generally it was a very mixed bag of the willingness of carriers to be understanding to the BI landscape at that time. I think it also was sort of very jurisdiction dependent. And, in our case where we, from the beginning, wanted to have an ambition of writing restaurants in all 50 states, writing business in all 50 states, sort of have to, there really isn't like a single answer for everything.
Are you, to the extent you're comfortable saying, are you guys across all 50 states now or close?
Oh, yeah, yeah, of course. So we're in 31 states today. The plan is to be in 50 states or like 48 states by the middle of next year with our admitted product. We're very actively developing non-admitted capabilities, which will allow us to write in mostly like cat-prone areas, and also gives us more flexibility to the earlier question about liquor liability in a lot of those jurisdictions, which are so punitive for insurance companies. Which are, I think these are signs of us hopefully maturing as an organization and thinking more tactically about how we want to service the marketplace.
Yeah, I want to go back and chat just about the recruitment thing that you said, because I actually was having a good buddy of mine runs a recruitment firm for the insurtech space. I was out on a golf trip with him last weekend, and we were chatting, and I've always been of this mindset, but he was talking about, I think, how companies will come to him and determine whether or not they want to use a recruiter. And it does blow my mind, because I think in this space, all the things you mentioned there, right? You're trying to convince somebody to leave a very comfortable job, take a really big risk. You might have what's a great name, but it's not Travelers or Progressive or whatever the more common stable names are. I don't think there's a better way. If you're an MGA right now, this is maybe a piece of advice to people who are listening, building MGAs at the early stages, you should be working with a recruiter that knows the space well. They are going to make that first insurance hire. Maybe you don't need them for the technology side of things or the app side or whatever that is. I just don't know how else you convince some of these really well-established and well-deserved insurance people to come over. So I love that that's what you guys did. You saw the value in it. I just can't recommend that approach enough, specifically for the insurance hire.
Yeah, I agree with that. We, transparently, we did the same thing for the early technology hires. We're in a very competitive, the most competitive engineering marketplace here in the San Francisco Bay Area, where we're headquartered. So just to talk about that for a second, very competitive area. When we were launching, it was sort of the go-go days of fundraising. So every company around us was raising at insane valuations. There are these enormous booms going on, like crypto and blockchain, and this was all before the AI craze, but which is crazy because it's really not that long ago. And now you can't even think about anything that's not AI, but that wasn't even really a thing back then, which is only like 3 years ago. And we were an insurance technology company, which I don't think is on like the average engineer's bingo card when they graduate from a degree in computer science. They don't even know what that means. And so we had to find people and convince them that this is actually a great place to work. Like, we're going to work on something really meaningful. We have an experienced team. We already have some good financial backing. And by the way, though, we want you to be in office a couple times a week. This was something we were really adamant about. We wanted to have a hybrid engineering culture. And we knew it would be tough to get everyone to the office 5 days a week. Frankly, I think we felt like, for me and my co-founder, even 5 days a week felt like a lot back then. I know now people are being a lot more dogmatic about it, but so 2 days a week in a WeWork in San Francisco, and we still work at WeWork in San Francisco, and it's great. And we absolutely had to use a recruiter, and we had a lot of close calls, great candidates. We spent a bunch of time with them, and then they would just not jump at the last minute. And then a month or two later, you see on LinkedIn that they went and joined some incredibly hyped startup, and you're like, okay, well, I guess I understand that, but I completely agree with that. I think over dependence on recruiters is not a good thing, both because it becomes very expensive if you do it for your whole headcount. Also, I just fundamentally believe that good startups have to be good at hiring, and you have to be a talent magnet, and it's the responsibility of the leaders to always be monitoring the market. You can't just not develop that muscle and say, oh, I'm going to have a recruiter send me candidates. To me, that's a little lazy.
It's definitely a balance, without a doubt. Again, I think just like the jumpstart part of it. Also, was thinking about this the other day, and I raised funds for an MGA, and we made this really awful hire on the claims side that I couldn't believe we had this guy Dylan here, and I think if I could have found a better claims person, how much better? Wow. But in all seriousness, you have a very short runway, where even if you're well funded, and I think to make a hire, right, and say, okay, 6 months in, I haven't found the best candidate, and now I need to go find another one. So now the job's not getting done. You're spending more time searching for that role, and now we have 18 months of runway left instead of 24. So it's just, I think in the early days especially, it's really a timing component. Bobby, you're right though. Like, how do you balance that with like developing a culture where you can pull in talent over time? But I think you put it right. Like, you got those first 2 key hires, right? And you let them kind of develop that culture at least from the insurance side, and kind of keep bringing those people in. Yeah,
I think I'm going to say something that is maybe a little, it's like provocative. It's really not meant to be.
Oh,
Doug is so happy.
Yeah.
So I feel like, having worked in the tech industry now for like 15 years myself, there are a lot of hucksters. There are a lot of people who are transforming an industry, but have never worked in that industry 1 second themselves. They look from the outside in, and the outside in and the ignorance is bliss. I think those are competitive advantages to a degree, but they just don't know that industry, and their thesis tends to be, this industry is stupid, I'm going to do it the right way, which is really arrogant and silly, and it's not nice, but whatever. I find that there is like much fewer, or there's much less of that like disingenuous character in insurance. People just tend to be way more genuine. They tend to want to really have friendships with the people they work with. I swear I'm not just saying this. Like, it's really true. In a lot of these tech companies, there's this very sort of like it's like, it's not necessarily toxic, but it's just this very competitive tension and culture between one another. Engineers sort of compete with one another. They want the gold star. They don't want the other person to get praise. And that is just like way less common. I can't really even think about too many examples of people I've met in insurance who are like that. And so the reason I say that is because if I was the one, as a relative outsider, I've spent almost 10 years in insurance now, but which is not much for certain people. But if I was the one and my co-founders were the ones trying to convince the 5th, 6th, 7th, 8th underwriting hire that this is a great place to underwrite, that would just come across differently than if two people who have worked in insurance their whole lives are like, this is a really great place. You can just tell that the person receiving that story, like the blood pressure is lower, like it feels real to them. And that's sort of the virtuous cycle I think you want to be in when you're trying to like magnetically pull talent to yourself.
All right,
Yeah,
Bobby,
I love that.
Two questions. One, who are the hucksters? Let's name names.
Let's get them out. Actually, Dylan, we should introduce Bobby to the 2% loss ratio guy.
Oh,
I think that
every show you bring them in
Every
somehow,
episode.
every single time. But Bobby, real questions so you don't get canceled. I want to talk about termination. It's an ugly truth, and what Doug was talking about earlier. Dropping from, I can't remember the numbers he used, but 24 down to 18 months, and you're in a situation where you're burning cash. How do you feel about quick firings or the speed of firing in general, and how much of a chance you're giving someone in these early days?
Terminations are definitely the least enjoyable part of running a business for everyone. I think that fire fast, it's one of those very tricky things because logically, when you read it on a piece of paper or in a Harvard Business Review case study, it makes perfect sense. But when it comes to actually doing that thing, it's probably the biggest difference between how easy it sounds and how actually difficult it is. Because you have a relationship with this person. And we really try to empower our managers to make decisions and really own the decisions for the shape of their team. And so that's the other thing that I have to kind of think about is I really want the manager to be, to feel like it's their decision, like they think it's the right thing to do. So I would actually, but just to focus on another side of the equation, which I think is something that we have, to your point about runway, we're big on the hire slow, much more than the fire fast. First of all, fire fast too in insurance is just tough because things take a little while to play out. And it's hard to know. That's one of the challenges about insurance, frankly, is that it's hard to know if what you're doing is good or bad. I mean, like that's the whole name of insurance. It's like you're underwriting something and you won't know if it has losses for a long time, right? So depending on the class of business. So that's just hard to do. And you don't want to be hasty and you don't want to create this sort of like edgy culture where people are worried about stuff. Things will not work out certain times. And again, it's just the least pleasant thing.
Yeah, but there's some people that it's not their loss ratio of their book, right? That's something that takes a long time to figure out. There's also people who just don't produce, whether that's producing as in insurance production or they're just not getting things done. And they don't have any concept of the rush, the drive that you need to in a startup environment to get things done, to resolve issues quickly, paralysis by analysis. What do I do now? Right. And I think you need to weed those people out extremely fast in startup world. And if you can prevent them from ever getting in, I actually agree with a slower hiring as well. Not once you need to hire him immediately. So I guess it's that first phase of really understanding that person is driven. They're going to make decisions quickly, that they're capable of action. They're always wanting to move forward. And that's the tricky thing, right? In interview questions, that's a lot harder to do than actually knowing from track record accomplishments and either working with them in the past, or working with or having a very close friend who you agree has that same mentality. That friend has actually worked with this individual and can attest to the fact that they hustle. Because I don't know that you can ever teach that to an employee. I don't think it's possible. I think that's bred in.
I agree with you. Hire slow. That would be my advice to everyone. Hire slow. It's more painful. You run the risk of burning out your team on the way because they want relief. But again, you have a fixed amount of money that you can work with until you become profitable. Hire slow. That's my advice.
I agree with so much of this. The one exception that I've come around to believing, thanks to my co-founder in our business here, Diego, I think he puts one great piece of advice out there, which we've tried to follow a lot of, and that's if you come across an amazing candidate who's interested, I'd go for it. And we've done that, and we've just made it work so that they can fit. I mean, if they're an amazing candidate, that's someone who's going to be beneficial, we go and get them and bring them into the corporation. And I must admit, that's been at times where probably financially we haven't been quite ready for that type of hire, but we've gone and done it. And I've been very happy with that result. So I agree with a lot of what's stated, but that one bit of advice has worked well for us.
I would agree with that too. And we have a couple examples that immediately come to mind where that's happened too, where we felt like we were maybe a quarter or two before like really needing that person. And then, frankly, bringing that person in always has, in all cases, helped us understand that like the way we were thinking about if we need them or not was also kind of flawed, which is kind of that's like the ultimate, you feel good about the decision.
Also, a top performer is going to, even if their specialty, you don't have a full-time job for them in that specialty, they're going to pick up other things because they're knowledgeable about insurance or about the technology side, whatever it may be. But they want to fill that time not with useless garbage, but actually getting something done. They're going to push you and drive you even faster if they're a real all-star employee.
Yeah, Dylan, I was giving you shit, but you did that thing. Like you came in, handled claims, and then you actually built our product. So yeah.
That's true. Because we didn't have any claims yet, so we had to get the product first.
That's right. We didn't have 2% loss ratio, but Bobby, I know you got to head out soon. We like to do this thing at the end of the podcast, developed by Peter here. Great question. I think it's a nice way to cap off the conversation. Actually, I have a million other questions I'd love to get to. I'll have to maybe get you on another time.
That'd be great.
Peter, why don't you close us out here?
Yeah, one easy one, Bobby, first. So where can people reach out to you and contact you? What's best? Are you at any events coming up over the next few months as well?
Yeah, I'll be at Wasia on Monday. I don't know when this is going to release. I'll be at Target Markets. I generally don't miss that. And then I will be at InsurTech Connect. But I'm also very accessible on LinkedIn. You can also email me, bobby@userainbow.com. I respond to every email that I get.
Especially if you are a highly qualified agent looking to place good bops with a good company.
I'll especially always respond to those people. Yes.
Yeah.
And we didn't mention it today because I really wish we could have talked about it, but the beauty and wellness section also that applies for that area as well.
This is great. I feel like we had so many, like we talked about these very important topics, and yet we were like absolutely just skimming the surface. We didn't even really talk that much about like our product or anything. So this is exciting.
I want to hear about the product. I really do. I really like to poke because from the claim side, that's also fascinating. Your product dictates the claims outcome, certainly as well. So it's an interesting area. Let's do it again.
Great. I think this is very much part one of this conversation, I would say. So Bobby, last thing. Because then Doug alluded to it. We always like to ask, what do you see as your second-time founder now? What do you see as your legacy in this space from the Rainbow journey?
What do I see as my legacy?
What would you like your legacy to be? Perhaps better phrased.
Building a company that people are proud to work at. I think that if I can do that everything else will work itself out.
Employees that are proud to be there. That is an amazing feeling, and that also means that they have a stable work environment, right? That's made a whole bunch of lives better. So yeah, I get that. That's amazing, Bobby.
Yeah, cool. Well, hey, Bobby, really appreciate you giving us an hour of your time today. Like I said, lots more to chat about. Hope to catch up with you at ITC. Peter, I think you'll be at Target Markets, yeah. Maybe you can.
I will be, Bobby. I'll reach out. So we're hosting an event one of the evenings as well with a couple of other people in the industry. So I'll send details of that. Yeah,
that'd be great.
Cool. All right. It's great to meet you, Bobby. Thanks so much for chatting with us.
Thanks for having me.
All right, chat to you later, buddy.
Thanks, Bobby. Take care.
Very, very good conversation.
We went HR. We went, and also I feel like that maybe FinPro needs to sponsor this show. That wasn't clearly intentional, but I mean,
listen,
at this point,
good friend. Happy to do some plugs. Actually, you know what? Somebody's sending me some swag, and I said I would wear it on the show. I'm not going to say who it is yet, but I think we should. I'm just going to start throwing that in, and then I saw a BMW earlier that I thought would look really nice in my driveway. So maybe we can get something going with them. I don't know.
Do they have their own program?
That's a good question. I don't know.
We'll have to look at it. Anyway,
probably. I feel bad. You were an overperformer. You make everybody else look bad. That was my problem.
No. It wasn't like that. But I appreciate you saying that, and I also, we definitely did go you hired me before you needed me. We built out the claims capabilities, and then we started working on product and operations, and
product, ops, and partnerships at the end as well. You're doing partnership.
That's true.
Yeah, good stuff. Listen, we got to get. We've had so many good guests. Bobby is now added to the list.
Yes.
We're on a nice roll here.
Yeah.
When are we gonna have a dunce, like a real bad one?
We've got pretty bad hosts here. 2 out of 3 hosts are pretty terrible.
We cannot afford a bad guest as well as bad hosts.
2 out of 3. Oh, hey, by the way, who do you think won or lost the contest? Should we have a side bet on who won or lost?
I think it's either you or Bobby.
Yeah. I felt really bad. I think we
you really just hyped him right at the. You're like time out. Hit you with this right before. Yeah, I find that people as they get more and more comfortable, including I think us, so that the 3 of us, that there are probably fewer ums and filler words as the show progresses, because you just open up. We're feeling more relaxed. I think it's pretty natural in any conversation, especially ones that are being recorded and shown to tens of people.
I guess so. I don't know. If I speak to somebody for too long, I'm sure I get bored and just start my brain wanders off. Yeah. Just like Dylan. This is why I fall asleep when I'm speaking to you on the phone late at night.
But that's because you asked me to do that for you, because you're like, I need to sleep.
I need to sleep. Can you tell me about some claims, please?
Yeah. No, come on. Those keep you up. You get excited about that. It's when I get into deep insurance nerd talk that you get bored.
Yeah. Guys. All right. Well, so I think we have another good guest coming up next week. And looking forward to that. Well, I think all of us have a lot of travel coming up, right?
Yeah. Nashville, Vegas for ITC, Paris.
Paris.
Yeah. Doug, for as much as you call me a redneck, I actually travel quite a bit. Okay,
this is for
like,
fun.
Oh, you just go to New York. I'm like there 6-7 times in the first half of the year.
You're going to Paris for fun, though, right now.
Yeah. You're going to, okay. Is this Paris, Texas, or Paris, France?
I was going to say Paris, Texas.
No, we're going to the one with the Eiffel Tower. There's not like there's any other
Vegas
towers around. That's it. The hotel, the casino.
Yeah. Actually, Dylan, you came up a lot on our golf trip because Alex,
please don't say things that shouldn't be said on the show.
It's a very sweet American thing. Do you remember we were all having dinner in Vegas? I think it was last year, and you and Alex got in an argument over Vegas having the best food. And he's like, mate, it's like there's there's London, there's New York, there's all these other cities. Like, what are you talking about? I don't know if you remember that conversation at all.
First of all, I believe that conversation wasn't actually in Vegas, but I was saying that it is definitely a food destination. They have brought in chefs from all over the world, and it's been actually they're quite well. And listen, London, Paris, fantastic. I'm agreeing with those. There's no dissenting view there at all. I'm just saying that Vegas also has a fantastic food scene. We needed
an enemy because Alex and I get along so well. We needed somebody as the antagonist. It was you in the restaurants. Every time we had a meal, we're like, I wonder what Dylan would think about this meal.
Probably would love it. I'm kind of chubby for a reason. I love food.
Yeah, me too. All right, guys. Maybe we should go do some work, some actual work. I think everybody would appreciate that. Customers would like it. Investors would like it.
I'm just gonna buy some.
It's Friday afternoon now.
Yeah. Have a pint.
Sounds good.
Sounds good.
All right, guys.
All right, thanks, guys.
Thanks everyone for listening. We'll see you guys next week.
Goodbye.